morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Mostly lower trade across the ag space here in the overnight trade. However, very little change coming off the three-day holiday weekend. While South American weather does remain largely favorable, a big drop here in the U.S. dollar does provide a little bit of a boost here to commodity prices. President Trump has threatened the European countries that oppose the U.S. complete and total purchase of Greenland with escalating tariffs. These tariffs are expected to start at 10% on February 1st, while could increase to 25% by June 1st. Right now, crude oil, that's up about 50 cents a barrel. Spot gold and silver have both surged into new all-time highs, while U.S. equity markets also brace for sharply lower trade, with major indices in the futures trade looking about 1.25 to 1.75% lower. Friday CFTC data did show healthy selling in both corn and in soybeans. 65,000 contracts of corn was sold by money managers. That stretched their short position out to about 82,000 contracts, while they also sold about 45,000 contracts of soybeans, and that dropped their long position down to 13,000 contracts. Light buyers in the soybean oil and meal, and in addition to that, light buyers in the wheat. Index funds, we saw a lot of rotation going on there. They were net sellers in the soy market, while buyers in the feed grains. Here in the U.S., we do have a major winter storm that does threaten to dump a healthy mix of rain, snow, and sleet and ice across the southern Midwest and Delta region late this week. Mostly dry across the north, with brutally cold temperatures across the northern plains and Midwest here by the end of this week, with the below normal temperatures now holding into the end of the month. March corn right now, that's down about 2 cents, holding near 4.22, also holding within Friday's range. Since last Monday's USDA reports, selling seems to dry up on dips below 4.20, while buyers back off here when we get above 4.25. Record ethanol production last week does raise hope for higher domestic usage. Exports do remain strong, with additional flash sales on last Friday. Right now, we maintain a favorable pace to reach or exceed the current USDA forecast of 3.2 billion bushels. Plantings in Brazil just getting underway. AgRuel estimates they have reached 1%. March beans, they are down 2 cents right now, holding near 10.56. Meal is mixed and very little change, while soybean oil, that's up about 20 points, with March near 52.80. Safras and Mercado, they raised their Brazilian production forecast to just over 179 million metric tons, just above the USDA's 179. They peg exports at only 105 million metric tons in 2026. That would be down 3% from last year. They see crush at 60 million metric tons, in line with the USDA. AgRuel, they estimate harvest in Brazil is now reached 2%. And Wire Services are reporting that China has reached their pledge to purchase 12 million metric tons of U.S. soybeans, with the first shipments expected to arrive this week. Wheat prices off 3 to 4 cents across the three classes. March Chicago holding at down 4 cents, near 5.14, holding within Friday's range. March Kansas City, that is now back below both its 50 and 100-day moving averages, near 5.25. Over the three-day weekend, Algeria bought 600,000 metric tons of milling wheat, priced between $253, $254 a metric ton on a CIF basis. That for Feb March shipment, likely coming from Argentina. Saudi Arabia also bought a big chunk of wheat, just over 900,000 metric tons, around 258 to 265. Range of prices there, likely from the Black Sea region. Thanks for listening, everyone. I hope you have a great Tuesday.